Hi, welcome to Market Alert for Monday, the 5th of February 2018. So on Friday, the pound was sideways for a while, even when it broke through the psychological level there. The market came back for a bit and then started to move lower again, sideways until the non-farm payroll figures, and then the market moving sharply lower, and then as the dollar gained strength throughout the day, the pound continued to move to the downside there. And if we have a look, you will see on Friday that we had a bit of a reversal on the dollar index there, and that is why we're seeing the pound move to the downside. So expect a bit of consolidation. Again, you can see in the daily chart the market struggling with the 76% on the upside there and finding support at the 62% on the downside at the moment. So again, you know, after a big move to the upside, there's going to be some sort of consolidation, and you can see this in the weekly chart as well, as we've got this sort of triangular shape starting to form, and generally the market will break one way or the other. In the Dow, it was carnage as prices just moved lower all the way through, down 665.75 points on Friday. We started off with selling, and they tried to buy it back over a couple of bars, and then the selling returned, and then it was just all the way down to the end of the trading session there. No signals on the chart because the volatility increased beyond the settings that we've got, which is 8 and 25. The only way you can take advantage of this, and we've become so complacent and used to low volatility ranges that you sometimes forget that once the volatility starts to move higher, you need to actually increase the bar range to account for this. So if we go from 8 to 35, you will see some of the signals appearing on the chart, but we'll see how things progress on or during the next few days. So that was the Dow intraday. The Dow daily, you can see the market finding support at the 76 and 62% there. A lot of selling around on Friday as well, but not as much as I thought there would be, because if you have a look, you can see we're more or less the same in this bar from last week as well, which I think was Tuesday of last week. Yeah, Tuesday, Wednesday. No, it wasn't. It's going to be Wednesday, isn't it? Wednesday, Thursday. In Tuesday of last week. And news-wise, Super Mario's out today. That's the only one really worth to note. At 4 p.m. he's not going to be happy because the US bond yields continue to move higher. Well, we're thinking about it. We're heading up to the 3% area that we saw in December of 2014 as well. So 2.862 today for the bond yields as well. So keep an eye on that 3% level, see what the market does when we actually get to it. But the madness is, you know, Yellen's gone. She went on Friday, thank goodness. Powell's coming in, which is not going to be any better. But again, you've got a situation where they're raising rates into the end of a business cycle, which is just insanity. And also any basis point increase in interest rates increases the repayments on the debts as well. So how long can it go on for is the question. On the implied volatility, this up from 1356 to 1457, we're looking around the sort of 16% area for a bottom in this market. I mean, you could come back a bit further and say, well, we've doubled from the 7% area from the lows in the volatility. So it's a bit of a subjective one really here. Certainly the price action is indicating that there is some support coming into the Dow at the moment, but we'll just have to wait and see. So we could be in that frothy area. Well, we're certainly in the frothy area, just whether the 100% or not. I don't think the up move is over yet. Personally, the market was only down 2% on Friday because of the amount it's actually put on, even though it lost 600 and more or less 666 points on Friday. In Bitcoin, this is interesting as well. The market rallied back on Friday, just kept sliding and sliding, and then all of a sudden shot up 2,000 points, and then was fairly quiet on Saturday, coming back, but down again yesterday, and down again on the overnight. Very interesting area. Market needs to move back to the upside soon, because if it breaks this area here, the lower Friday, which was 7625, then we're heading down to the below the 6,000 area for this market, which will be one massive pullback for Bitcoin, which is going to be in the from 20,000 down to 6,000. So any of these people that were buying into this, remortgaging their houses at 20,000, thinking it was going to the moon, will have been severely financially shafted. There's no doubts about that. However, it probably does represent an opportunity to get to the buy side. Not that that's a recommendation, but just common sense would say that Bitcoin isn't going to disappear just yet. There's no doubts about that either, but buying in at 20,000 or buying in at 6,000 or in these areas is a bit of a no-brainer, isn't it, when you actually look at it this way, and a logical way. The froth has certainly come out of this one. Right, so that will do it for today. If there's anything to report, I will let you know. Other than that, as ever, thanks for watching. See you in the next one.